Hello and welcome to the Good, Bad, and Ugly weekly review for the week ended 23rd of February 2024. This week, from the Weekend Investing Research Desk, we had these fantastic content pieces. The first one was why pattern recognition is important. We talk about several patterns there. What can happen after Modi 3.0? The discussion on February 19th. We posted this. Uh, then something about being in the top winning list and not in the uh, bottom of the heap, always staying ahead of the market. Uh, Happy with gains made or sad with gains lost. A behavioral pattern that is seen where people are unduly unhappy about what they could not make, but have no relevance or importance being given to what they've already made. Another very nice nugget on how we allow our ego to rule over, our portfolio decisions. Index investing, very important content piece. How index investing is feeding itself. It's a sort of a self-fulfilling cycle. The superb advantages of retail versus larger investors. I think that is mostly people don't appreciate this very unique advantage that retailers have. One piece on rain industries. A lot of market analysts are sitting with 6 years of losses on this stock and still waiting for the rain to happen. One piece on Paytm, whether it's time to do Paytm now. And the most important thing you will see on this in this year is about a very good, very precise study about interest rates and uh, equity markets along with gold. Download the Weekend Investing app, available both on Google Play, Apple Store, and you can enjoy all these content pieces and enhance your knowledge about the markets. I share whatever little I know about what I've learned over last 29 years, rightly or wrongly, and I hope that is useful for at least some of you out there. Nifty this week, very choppy, very volatile week, which tested weak hands in the middle of the week. A sharp drop from 22,200 to almost 21,900 and below. Uh, Almost all of it recovered by the end of the week. We have closed at another new weekly high. So no damage done from last week to now, rather a small gain. Nifty weekly chart, very good. We're gradually climbing up. No worries on this at all. I think a big move is now awaiting us. We have been consolidating now for almost 7 weeks. I think a big move is upon us. Uh, Somewhere between now and the May elections, we will get that big move, is my speculation. Benchmark indices, Nifty Next 50 again gaining 1% this week, much ahead of other indices. Nifty 50 also up 0.8%. 200, CNX 200, CNX 500 also in similar range. Small caps and mid caps did a little less this week. For the financial year, small cap 250 leads the index pack at 72.6%. Mid and small cap index are at 64%. Nifty Next 50 is at 56.5%. Remarkable performance by this index this time. CNX 500, CNX 200 in their late 30s, and Nifty at 28% for the financial. Overall, Nifty is all right. It is not really, given any great shake returns, but 28% is something that one will not complain about. MI25, despite small caps doing only 0.5%, MI25 was up 1.5%, now up 75% for the year. MIMT all cap is a remarkable strategy, probably the best amongst the entire pack. 1.4% up 94% for this current financial year, and these are all very liquid, all cap stocks and extremely low churn. In fact, a lot of our subscribers keep complaining, why don't you make any changes? MISTATH up 1%, up 57% for the year. NNF10, the resurgence of the Phoenix, up 1%, up 91% for the financial year. Just compare it with its benchmark at 56%. This is just amazing. A large cap strategy delivering 90.8%. MI30, a undiscovered gem, I would say, 0.8% up 62%. Very, very gradual but short compounder here. HNI Wealth Builder, 90.4% for the financial, 0.6% for the uh, week. MI20, 0.6%, 122.9% for the financial year. MI35, up half a percent, 107%, 0.2. NG5050, the free strategy, up 15.6%. ATH2 lost some ground, 0.3%, but very impressive, almost 80% for the financial year. MI Evergreen also lost some ground, but very impressive, 65.4% for the financial year. And India top 10 down 1.1%. So this is the first time in many weeks that India top 10 has underperformed on a weekly basis. But if we see the financial year, we are sitting at 56% on Nifty stocks versus 28%. I mean, doubling of Nifty is no joke, really. Real estate remains the leading sector, up 4% this week. For the financial year, we are up 137%. FMCG, consumption, infra, autos all up more than 1%. IT, PSE, and PSU banks lost some ground, but most of these have done really, really well for the financial year going forward. Autos have made a huge leap in this last week or two, so they are now in number two position. Real estate has come back from fifth to third. PSU banks are leading. Pharma is also improving, and consumption stocks have taken a leap forward along with some banking names. These are the ones that have jumped ahead. Metals, commodities, and public sector enterprise stocks have taken a backseat in the last couple of weeks. Weekend investing strategies spotlight is on continuous CAGR of Nifty Next 50 and NNF 10. This chart is showing you what the CAGR has of the strategy versus the benchmark. Continuously, the NNF 10 has remained at a higher CAGR versus the index, and right now it's sitting at 34% versus 24% on the index. The Nifty Junior is the universe for NNF 10 strategy, and just number of stocks is 10, so it's a reasonably concentrated position in large cap names, but a remarkable performance in the last 1 year to have finished and to be close to finishing this current financial year. Recommended capital is 5 lakhs to 30 lakhs, and it's rotated once a month. This is all I have for today's good, bad, and ugly report. I wish you a great weekend, and I'll see you on the other side. Thanks. Bye.